This is Investor Perspectives. I'm the host of Investor Connect, Hall T. Martin, where we connect startups and investors for funding. In our new Investor Perspective series entitled Impact Investing in a Post-COVID World, you'll hear about participation in the impact investing space and what investors look for. As the COVID pandemic passes, we emerge into a new era. The impact space is now undergoing tremendous change as we shift to a post-COVID world. Impact investing in the areas of sustainability and the environment take precedence in the financial industry. We have investors and startup founders describe the changes coming up. We hope you enjoy the show. Investor Connect is a 501c3 nonprofit dedicated to the education of investors and startups for fundraising. Please consider donating $100 to the program to help others in their investor and entrepreneur journey. You can find the donate button on the investorconnect.org website. Our first guest is Brad Gurry, CEO of Social Suite. Social Suite is a SaaS platform that enables the collection, visualization, and communication of impact data. Their team is global and their customers span the globe and are leading impact-minded organizations. Brad, thank you for joining us. So what is your participation in impact investing so far?
So we're certainly a supporter of impact investing as a service provider, and that's our position around it. So typically organizations are coming to us at a point in time where they need to be able to measure the impact of their organization. So what we'll do is that we'll actually support them through being able to embed the methodology of what is it that they want to measure into our technology solution, and then being able to use our tech solution to be able to support the data collection so they can evidence their program or their organization. So that's where Social Suite plays its role in terms of the impact investing space.
Great. So what should investors look for to invest in an impact deal?
So I think the underlying reason is that when we're looking at impact investing, there is a financial return on it, and that's an easy thing to demonstrate. But it's really about what is the underlying impact of that organization. And so I think that there's core things that an impact investor really needs to look at, which is around areas of ensuring that the organization is set up successfully to be able to measure the impact that they're delivering upon the program.
Our next guest is Looney Liebs, founder and managing director at Fledge. Fledge is a global network of conscious company accelerators and seed funds that help entrepreneurs create impactful companies and co-ops at scale through short, intense programs filled with education, guidance, and a massive amount of mentorship. Looney, thank you for joining us. So tell us more about your participation in impact investing so far. What are you doing now and what have you done?
I do a few different things. I run this global network of accelerators called Fledge, and I don't run them all around the world. What excites me about that work is that I just run the one in Seattle, and then I teach others around the world how to do a program that they want to do. It doesn't have to be exactly like mine. It can just take pieces of what I've done before or pieces of what someone else in the network has done before. And again, help mission-driven for-profits. Out of that has come three other things. One is that we now run an angel accelerator program. So now we have a program that's 2 months long that isn't for entrepreneurs, but actually for angels. We teach people how to be impact angels. Third one that popped out of this is Realize Impact. It's a 501c3 nonprofit public charity. And that sounds like we do charity work, but not quite. What we really do is take philanthropic dollars and turn them into impact investments. We've been doing that for almost 2 years, and it's working really well. There's a large amount of capital in the United States that's locked up on we call it the other side of the philanthropic wall. So if you've given money to charity, you've gotten your tax return, you can't have the money back. It's not your money anymore. But a lot of that money is tied up in forms like donor advised funds and family foundations. And it's just sitting in Wall Street. It's not doing any good for the world. So we can unlock that and turn it into impact investments. And then the fourth thing I do, something that's spun directly off of Fledge, is called Africa Eats. That's my work in Africa. And there we took 27 graduates of Fledge and we've wrapped them in an investment holding company, and we're helping them grow faster than we could as just Fledge alums.
Great. Well, you've already talked a little bit about what you look forward to invest in. It must be mission driven. Do you also put a financial criteria on it as well?
Oh, sure. So we're investors. We're for-profiteers. We like market rate returns.
What
so
exactly
the criteria we look at when we look at companies is team, impact, and odds of success. That's how we summarize it. And so just like anyone else, it's team first. Then we look at the scale of the impact. In terms of Fledge, we don't care which of those SDGs you're working on, as long as it's measurable in one of them, at least one of them. And then odds of success are all the normal criteria you look at in a business.
Next guest is Vishal Arora, managing partner at VDOSH. VDOSH is a venture capital firm that closely works with a network of accredited investors and vetted entrepreneurs. VDOSH provides investors the opportunity to invest in promising new startup companies alongside major players in the industry. Vishal, thank you for joining us. And so what is your participation in impact investing so far?
So our participation is mainly, we have not actively kind of looked into the social, we have looked into some of the social causes, but we have not actively looked into the environment and other side because our thesis was different, right? Our thesis for the fund is to use of an emerging technologies or multiple use cases for that to have an impact on the user economy. And when we talk about a user economy or experience economy, what it means is that how these technologies can leverage to make the life easier, whether it's a life of a consumer, whether it's life of a healthcare provider, whether it's life of a basically healthcare consumer like a patient and things like that, right? So we are looking for a technology empowered impact area which makes either a service provider or consumer or basically a large institution and their employees, their life much easier in terms of impact. So that's what we generally look for.
Our next guest is Chelsea Burns, principal at Escaladora Ventures. Escaladora Ventures provides water and energy technology consulting services. Throughout Chelsea's career, she has bounced back and forth between consulting and operating startups. She currently focuses her work as a climate tech angel investor and startup advisor. Chelsea, thank you for joining us again. And so what is your participation in impact investing so far?
I've taken a couple of different angles here. First and foremost, I invest in climate tech just because that's where I work professionally. That's what I studied. I got my master's in, so I really understand the landscape. But I also just do some general gender lens investing. Most of that has been through my angel network, which is Pipeline Angels, which is just really trying to get more access to capital to diverse founders, women, non-binary femmes, and just more women of color as well.
Great. And so what do you look for to invest? What's your criteria?
I think founders that traditionally have not had access to capital is an important metric for me. I think in the climate tech space, the angle that really excites me is this intersection of fintech and climate tech. There's a lot of opportunity for retail investors now to gain access to markets that were traditionally reserved for more institutional level investors, be that renewable energy projects, energy efficiency projects, different projects, debt or equity, that actually have really nice, solid returns in this low interest rate environment.
Our final guest is Richard Samuelson, Chief Investment Officer at Swan Venture Group. Swan Venture Group is forming a family of funds for investing in early-stage seed and Series A rounds. They are a regional fund targeting their investments in the Pacific Northwest to include the U.S. states of Washington, Idaho, Montana, Alaska, Utah, and the province of British Columbia, Canada. Richard, thank you for joining us. And so what is your participation in impact investing so far?
Well, we've invested in one sustainability company already in our high net worth fund. It's called Moment Energy. It's a Canadian company, as it happens. And they are developing a technology that recycles EV batteries and actually improves the performance of those batteries. So recycling is obviously a key element of sustainability, and they have attacked what's going to be a burgeoning market in our view. So that's our first impact investment, as you will. Our fund just closed in July and we made 3 investments. So one of them is full on impact investment.
So what criteria do you look for to make an investment here?
We're looking for disruptive technologies, something that can make a step change and addresses a specific climate-related, sustainability-related problem. And oftentimes in a market that is underaddressed. In the case of Moment Energy, we don't run into a lot of companies that address the recycling of batteries problem for EV. And so we seized upon that opportunity very, very quickly. We will continue to look for markets, growing markets like that, where a new technology can be very effectively implemented and needs to be implemented quickly in order to achieve our shared sustainability goals.
Thank you for joining us today. As always, be sure to leave a review, subscribe to this podcast, and share it with others. Let's go start up something today.